Good morning, guys. It's the 25th of April 2018. This is the DAX morning briefing. And we're going to run through a couple of completely fresh, clean charts today. It's always a good opportunity to clear your charts, turn them back to zero again, and just rebuild whatever ideas you can see from the price action. So that's what we'll take a look at. We've got the 20-minute chart in front of us here. We'll take a look at that first. Then we're going to go on to a smaller chart, 250 tick chart. In this case, it works out to be smaller. And we'll just take a look at the swings, have a look and see what pops out at us. All right, before we get started, trading financial markets is risky. It involves the risk of losing our invested money. We're not providing financial advice here. This is for educational purposes only. Please ensure that if you take any trades off the back of this information, that you do so entirely at your own risk and that you understand leverage and margin requirements as well. Okay, so welcome to the guys that are with me right now in the webinar, and hello to you guys that are going to be viewing this video at home. All right, so seems to be live. Let's get going then. So this is the 20-minute chart, and the first thing that I'd always do whenever I'm looking at a blank chart like this is just map out what would be the major swings, the major pivots. You can see them pretty clearly just by eyeballing them. So there's one there. And just mark them out with any kind of chart marking tool that you've got. And I'm just using simple dash lines, standard in the Sierra charting platform. Okay, it gets a little bit interesting here. What I've noticed pretty clearly, you can see, is you've got higher highs and higher lows, nice bullish swings, very, very clearly defined. But it starts to get a bit unusual here. So we're just going to check to see whether or not we did create a new higher high. Wow, I can't really say that that's a higher high, even though technically it did pierce the previous one. I don't really see that as anything significant at all. So I'm going to have to call that, rather than a new high, just simply a double top. Loose terminology. But what you'll notice here is that we've got a slight change in behavior. We've got a broken swing, a broken low, and a failure here to take out this previous high. That was its job of this particular leg, was to take out that previous high, and it didn't. And as a result of taking out the previous high, its next job would have been to defend that low, and it didn't. So there's a change in behavior here. Well, it certainly looks to be a change in behavior here. And then you sort of ask the question, well, what does that mean? And it could mean a lot of different things. You've got to wait and see really for confirmation. However, the key things that changing behavior generally tends to signify as a reversal. And so we're kind of asking the questions to ourselves now, is this actually the sign that we're going to be getting a swap here? So we probably need to start looking at the smaller time frames to find out whether or not we've got anything that's worth marking out. So they were the major swings. The black lines were the major swings. And you could probably go and take a look at the minor swings in the middle. So, for example, you had these ones here. Something along those lines. We'll probably just do a couple at a time there. And then you had a change in behavior here because you had this bearish reaction leg started to expand on the pivots, which was unusual, and then it broke back through to create the double top on the way back down. So we've kind of, these minor swings have expanded into the major swings, and they found a change of behavior, or they found something at this double top here. And yesterday probably caught a lot of traders out, because I'd imagine they were expecting for this to head up to 700 and beyond, as a lot of people would have done, as they would have expected these swings to continue. So a lot of people would have been trapped here. So I would imagine there are a lot of people that are currently sat on pain that would have gone long here, possibly. And they're just waiting for price to come back up so they can release and get out of their position. So this is going to be a zone to mark out on the chart. 650 is an area of significance at the moment. Now, we've got this multi-pivot line. It's not the best multi-pivot line in the world. However, we've got a couple of touches here that the underside of that line might well provide us with something interesting to watch if it manages to get there. I don't know whether I would turn that into a fork at this stage. The only fork, I guess, that I would probably keep on the chart would just be from these pivots here. And I've just deleted it. These pivots here. Now you'll notice at the bottom of this, we're currently about to test the lower median line parallel once again, but we have pierced that already. So you kind of think, well, how valid is that fork now that it's already been pierced? So I'm just going to create a sliding parallel here and just keep an eye on that guy, see whether or not it creates any other activity down here. If people were looking to get long, then that might be an option, but we'll keep that one out for the moment. There's certainly no surprises that this would have been an area that would have caught price. That's the second major swing back. If that gets broken, then, I mean, it's a clear reversal, isn't it? But at the moment, it seems to be holding. So we'll see what the second test of this one does. So that's really all the conclusions we can draw from this particular time frame at the moment. We've obviously got to be aware of the fact that we are about to test a pretty major second swing back key trend defining level. And we've got a bit of a technical battle going on here with this fork. So it'll be good to see how we get on with this zone. If we're looking to get long, it would be nice to see whether or not that particular area can hold again. All right, let's just quickly save that chart up. We might be able to get a bit more information from this next one. I'm just going to copy and paste that into something behind the chart here. There we go. Let's get back in here. All right, so that was a 20-minute chart there on the major swings that I was looking at. So I'm just going to go and take a look now at a 250 tick chart to see whether or not it gives a little bit more granularity and see what we can take from this. So maybe let's just see how much data I want on the screen here. Okay, I've kind of zoomed out quite a bit, but let's work with this. So first step, once again, just mark out where the major swings look. This seems to be a compressing setup. Really unusual activity here. And then it went into a nice, clearly defined bearish. Well, it looks to me like a... Just working this back. I don't think I need to do all of the detail. You can clearly see where all the swings are on here. And there are quite a few of them. And if you were zoomed in, you'd see them a lot more clearly. But it gives you an idea at least. You get the feel, right? And so on and so on and so on. So you mark those out, and it helps you start to read the pattern, read the kind of flow and the rhythm of price action. It might make a little bit more interesting when we get to this little stage here, because just zoom in on these. Nice, cleanly defined lower lows, lower highs, lower lows, lower high, LL, LH, LL, LH, LL, LH, and so on, so on, so on. You could perhaps look at this guy here and say that's a lower low, this was a lower high. But it's kind of really a zigzag, that, isn't it, of this little swing. Yeah, it's right in the middle of it. So I'm quite happy to just ignore that and call that the swing. Now, it gets interesting up here because we've got a larger reaction than we would normally expect from the previous ones. It did continue to take out a new low. But at this stage here, when this formed, you think to yourself, okay, great. So it's just going to continue, and we'll continue to trade this lower as it's been creating lower lows and lower highs. But it didn't. It failed. And it failed at this stage here. It created this new low, and that was confirmed once this high was taken out. And this high took out this previous swing back. So actually, this was a change in behavior. And so you got to think, well, is this significant, this little area here that we would have marked out? So you kind of map it out, mark it out, and we'll just maybe shift it to the left just to see what else will happen back here. And I wonder if that's probably no coincidence that this particular area is still significant because it was previously on these lows. Look. So this is an area where in the buying case, that area was defended. And quite a lot of effort was spent from buyers trying to defend that zone. And when it came back down here, there was a battle, as you can see here. And again on this side, but they still tried to defend it. But actually, who won this battle? Well, it was clearly the sellers. The sellers continued to move this lower. But we'll keep that area marked out as a potential zone of interest, as a potential swap zone that might be interesting to watch at another time. And price continued, creating more lows. And the swings you can continue to mark out. Now, this guy here, similar situation to before that we've marked out here. The job of this one was to take out that low. It didn't do it. It failed. And as a result, a new minor, very minor, trend formed in the opposite direction, which I think we're probably currently, we are. We're currently in right now. And actual fact, that's interesting. I'll show you why in a second. So maybe you start to do a basic bit of line play here, and you start to think to yourself, okay, well, there's a multi-pivot line there, 1, 2, 3, 4 touches or so on this particular line. That was the high point there. I wonder whether, if we broke that line like we have now, whether we could forecast where that particular area might top out or bottom out. So, for example, you take the multi-pivot line here, you pull back up to where the original action point was, which was this little high here, and then it would draw opposite and equal reaction on this side. So if you were to short break through that line, that might be an area that you look to target, and you're looking to pretty much get down to that zone right now. And of course, price might just continue and fly through that. And if that's the case, so be it. But if you get a reaction around here, it's just another example of how these tools can be very, very useful at forecasting these particular moves. So we'll keep an eye out on that. But you'll notice here that you've got this very, very clearly defined previous bearish trend where something happened in here, and almost you've got this kind of mini swap zone here now, because as price continued higher, it's used, and you can see it, it's used that area to continue to build from. So buyers are still trying to kind of gain some sort of foothold in here, but they're just getting slapped each time. So what I'm going to be doing is I'm going to be watching this particular zone here to see whether or not that's just a wash. Probably bad terminology used there, because a wash of what level? Just simply this kind of mini swap zone level. There might be a lot of people that put their stop losses under this level, maybe. So we'll see whether or not this is just a fake move to take that level out, and off we go. So I'm watching to see whether that develops. Or alternatively, I'm just watching to see now whether this particular low gets taken out and this bearish trend continues. And if it does, we'll continue to watch it. I'm watching that reaction line, see whether we get a reaction or not. And if we do, and we get back inside this zone below this green box and above this green box, then we're technically inside a pretty large battle area. We've got a mini swap zone here that we've defined from a change in behavior of this bearish leg that got broken, and then it held, and then it moved higher. So you've got that mini swap zone, which has actually, if you look at the price action here, see there's a large candle in there, which is kind of what you want to see when you're breaking through a swap zone. You want to see a zoom through it, rather than just sort of scattering a price action like that. You want to see it go straight through. So we'll see how it reacts on the underside. But if we get above that, then we're below this swap zone here. So we're kind of getting compressed between two battle areas. So, you know, you could quite easily see price just kind of bouncing between these areas as it starts to, one side, buyers and sellers, try to establish some sort of dominance. And we're not quite able to do it. So it's going to be an interesting conclusion to this particular battle. Which side would I want to be on? Well, I might be interested in taking a look at a long, but I think we've got to pay attention to some of the American indices as well. They were pretty heavy yesterday. European indices as well as that, to see what they're up to. And certainly not against the idea of either staying out or shorting the market. But if I had to make a choice, I'd probably stick to wanting to look for opportunities to get into a long at some point. And that's kind of really all there is at the moment. I will just continue to keep an eye out on this basic line play. We'll continue to see whether or not this 383 holds, see whether there is any change of behavior and any signs or clues that price action is beginning to change. So again, I'm just going to save this one up. And then the last chart I'm going to show you is a TPO. And hopefully you'll see why I want to show you that in just a sec. All right, that's you. right, TPO, let's get onto that. That's over here. What stands out to you on this particular chart? Just to explain that these are volume profiles of individual daily candles. All right, so that was yesterday, day before, so on, so on, so on. This is currently today. I think that's green and gray. The green section is price action that is outside of the value area, and the value area is the gray section, normally in the middle of the candle. Represents where most of the volume is traded during the particular day, up to 70% of the volume. So for yesterday, you'll see the slight black mini border on the left-hand side of each candle as well. That represents the initial balance, the IB, which is the first 2 hours of trading in this particular example. So you'll notice that the IB formed towards the top of the candle, quite a bit of volume, and the point of control, which is the highest traded level of the day, formed in that particular zone. And then not only did we take out 1, 2, 3, pretty much the high of the previous, well, all of the candles that I can see on this particular chart at the moment, not only did we take out the high of all of those candles, we took out the low of all of those candles. And that creates something called a wide range outside bar. Really, really interesting candle pattern. And I'm not going to reveal what my conclusions are for that here, but go and study that if you're not familiar with it already. So we'll keep an eye out. It does create a potential obstacle for longs, but we just got to see how it plays. But yeah, it's taken out the highs and the lows. It's one of the largest candles, and right now we are below the value area from yesterday and looking to struggle to really kind of make much progress to the upside. Point of controls that you can see from yesterday seem to be a little bit out of reach, but 620, 630, somewhere up there is where it formed. So that's kind of slowing me down a little bit. And that is one thing I will mention. There's no need to really save that up. If you don't have TPO on your current platform, don't worry. It's only really a tool. It's not essential for your trading decisions. All right, guys, so if you joined late, we've just summarized two main charts, really. The 20-minute chart, which is looking for me at what is currently happening on the major swings, which is this. And we had a clearly bullish trend that seems to be exhibiting change of behavior here after it's broken through a previous minus major swing here. We've drawn a fork on the three most recent pivots, and we look to be testing the lower median line parallel. If we break through that again, we've got a slide in parallel here, and we're really looking at the final line in the sand being this major second swing back here. Break below that, and if it's not a fake break, it looks pretty damning for buyers. And then we looked at the 250 tick chart, which is a much more granular chart. We posted here an ACR line set action center reaction based around this multi-pivot line, using that as a center line. Looking to be testing that as we speak right now. But we were looking to see whether that would be a target for traders that could have shorted from up here. All right. And two major swap zones to mark out the charts. Keep those on there. Have a look and see whether we get back inside those and what kind of battle continues from there. All right, so that's pretty much what I wanted to show for today. We'll leave it there. We'll be back again tomorrow with another one of these. And be sure to check out the website, make sure it's all working for you. I've migrated it from one domain to another, so I'm hoping that it all works fine. You don't even notice that it's happened. But fingers crossed, everything will all be nice and smooth. Have a great trading day, and I'll catch up with you guys, or some of you guys, in the chat room later on. Take care.